Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Monday, the 22nd of February, 2021. Well, small up day, except for getting high stocks. The THCX was down. Mixed day and so many other stock indices were literally all over the board. TLT, the interest rates continue to work themselves lower as we suspected. And finally, a bid coming into some more of the currencies, the British pound continuing to stay strong. And I'm watching even what's happening in FXE as it's getting stronger. In PAVE, do you remember when I was bringing this chart up and I said it wouldn't surprise me if we go for these highs? Well, you take a look at where you're at on this. And the reason was the chart action. The chart action looked good. We first had a gap to fill back here. Then we started coming back up. The pattern of the chart, not the easiest to trade. I'm the first to say that it was the logic of the trade that made sense. The weekly charts are much easier than the daily charts, as it turns out in this particular one, because you got a lower low. This low was 22.13. That's 08 and a higher high. Yet here we are knocking on the door of the high of this whole move. So that becomes fascinating. The market has held and once it got over the 18-day moving average of closes, it stayed above it. So where's the resistance? Well, it proved itself back here, the upper Bollinger Band. I would assume it's going to prove itself again at 23.27. And in terms of momentum, well, this is what I'm looking at. You have both numbers over 80 in the slow stochastic on the close today. If we go back to Friday, same thing. Let's go back one more day. Come on, work with me. There we go. Not there on Thursday. I need one more day where the market has both numbers over 80. Do the odds favor it? No. So be very careful. You're at a zone here where profit taking can set in and you don't understand it often, but it's because you rarely have done embedding in the market. More times than not, you don't embed. Be careful. You're right in that area. And the embedding, if you don't really get a strong one where the numbers are strong at the end of the day towards day's high, if you embed, be cautious. In THCX, I've been waiting on a correction where I think the market runs out of downside. I think it'll be into this neighborhood of 21.53, but that's what I think. That doesn't mean it's a trend. The trend is down, the bias is up, and momentum is down. The market's headed, I think, right for here, that 18-day average to figure out what to do next. In SMH, it's the same thing. Momentum is turned down. The swing line is down, but the bias is up. Logic tells me 241.85 will be the first stopping spot, and maybe that's where the market works a bit to figure out what next. XLI has a fully embedded reading. These are new highs on the move for this industrial sector. 92.54 could easily be its next stopping zone. You have to lose the red line under 79 to tell me that this move has run out of upside momentum. Until then, pullbacks. It's a Tuesday tomorrow. You could easily get one. I think they'll be well supported. In the energy sector, now you're knocking on the door of what? You got up today to 48.47. 48.38 is the upper Bollinger Band, and you backed away by the end of the day to 47.78. So what do you think the pros are doing with an embedded reading? What did I say last week? I think they're buying the market at a key moving average down here. I show that in my morning subscriber video, not here. And I think they're pumping out against the upper Bollinger Band. And I think they'll keep that in play until it just doesn't work anymore. QQQ actually turned bearish today. This is how the market looked coming in. You had the pattern of lower highs and a higher low. With the action of Monday, this is how you look. Lower highs, lower low. Therefore, until it tells me different, I would assume that the market gets sold by the pros at 328.87. They probably bail if you get over 333.99. And they're looking, if they can get it, down to the 316.52, the lower Bollinger Band. Here's the dilemma with the objective on the downside. When's the last time we hit a lower Bollinger Band? You got to go back to the October-November period. It's very similar in the futures market. So, as much as the bears have control, keep that in the back of your mind. On the emerging markets, I teach that momentum often leads price. So here you have a market that certainly bullish on the emerging markets, the EFA. Everything's embedded on Friday. What happened today? You lost that reading. If you were sitting next to me and you were paying me as your broker during the day, and this is how the market finished, I'd have told you today on the close, get out of all these positions. The odds favor that unless you re-embed tomorrow with a strong, strong up day, the price is going to try to work back to the 7,500 level. That doesn't mean I'll be right, but I'm telling you the way that I'd have talked to a paying client. Make-believe world, right? Do have them. Paying clients, but I really, not in this game. No, futures markets, people will write me. I'm not a stockbroker. I don't try to play that game. In GLD, you got a higher high. Then you start with the pattern of a lower low, higher high, you come down. Well, so we're not trending. That's the first thing. You're bouncing away each time from the lower Bollinger Bands, and you keep finding resistance here at the 18-day average of closes. Okay, that gets interesting. You still have the 100-day average above the 200, so it's not a complete bearish lineup, as I call it, on moving averages. We just got to wait and see. But who's got control of the market going home? I don't know if anybody does. I'm going to just look for resistance at 170.53. Gold miners, it's a similar pattern. A higher high, lower low, so you bounce back and you keep failing against the 18-day average of closes. You were very, very oversold. What do I teach the first time you hit a Bollinger Band? You're probably on borrowed time. They rarely keep staying under it. And if you didn't listen, well, now you're wondering, oh, now what do I do? That's all I'm trying to point out. TLT, this is called a gorilla glue trade, coming down, embedded. It just stays bearish, doesn't even bounce to let people get short the market. Now, we are going into a Fed question and answer period in front of the Senate Banking Committee tomorrow. So, could there be some profit taking? There certainly could. We'll see how the market reacts, but I think the first hard rally, the pros are waiting to sell again. The FXE, I've been waiting for the market to come out of its downtrend. It did it on Friday. You had a higher high and lower low, and now you're getting a bit of follow through. You're out of your downtrend. You have not begun an uptrend. You know, whether you're trading spiders, ETFs, I don't know if you use pivot points, but they're very popular. It really doesn't matter the vehicle. If you can take the previous day's high, low, close, open, you get a formula, basis the formula, you start working and you come in with the numbers. Now these numbers, these are resistance numbers. Then you'll get your support numbers and your pivot. I then tie it together with momentum. It's for the person that's looking for an entry point, maybe an in and out trade. You tie it together with this and it's another tool. A lot of people watch it. How do you get it? It's simple. It's free. It's part of my 3-part video series, free to you. Just go to our website. Under free offers in the bottom right, sign up for it. Be right there in your hands. I'm Ira Epstein. You have a great day. I will talk to you all tomorrow.